Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Friday, the 31st of October. And I'm starting off with Castleton Technology, where there's been quite a rough ride in terms of the sharp rally that we saw towards the end of last week, and then the sharp pullback, which really basically got us to where we were back before, at the beginning of the month. Current position is that we've got a higher low above the 200-day moving average at 1.06 pence. We've also had a rebound off this extended December support line running through 1.2 pence. And the current position looks like it could turn into a bull flag or a positive consolidation above the initial October resistance. That was around the 1.3 pence level. So one of the best way forward here is to regard the 50-day moving average at 1.29 pence as the end of day close stop loss, and then anticipate a partial or even full retest of this 2 pence plus spike that we saw for October. The plus point at the moment is the higher low, the higher second low above the 200-day moving average, and also the way that the RSI has bounced off the neutral 50 level to leave it at 58, which is a decent entry point normally in terms of bull scenarios. Next up is a new stock to this particular focus, and that's Ferrum Crescent. Here we've got what looks to be a decent setup in terms of the rebound off a very oversold RSI reading towards the 10 level. There was a similar one here at the beginning of June. We've also got a classic bear trap rebound from below the former May intraday low, which was at 0.55 pence. And really the view at the moment is that while we stay above that, we've got a decent bear trap rebound scenario. The best case target at the moment is towards the top of this wide June price channel at 1.5 pence. So towards the 200-day moving average of 1.34 pence, even if we fall away after that. If you're cautious on the shares, maybe you'd wait for a break of the 50-day moving average at 0.78 pence, because that blocked the rally in August. But with this bear trap rebound and the 0.55 level from May, that is a pretty good sighting shot in terms of going long Ferrum Crescent at the moment. Finishing off with a stock which has been trying to recover in the recent past, and that's Monitise. In fact, sort of half kicking myself for not looking at it before, but we've got a bear trap rebound from below the 26.25 floor of September. The shares went down to around the 26 pence level for October, and then the higher low later on above the 10-day moving average of 29 pence. So the view at the moment is that while we remain above really the mid-October's peak at 31.75 pence, we do have a reversal very much in progress. There's also RSI support from the middle of last month as well, and the break for the RSI above 50 to leave it at 55. So the best case scenario here probably is return to 45 pence, which would be sort of the July-August, the middle of the July-August range, and that could happen over the next 2 to 3 weeks. Any weakness towards this 31.75 pence level regarded as a buying opportunity, and only back below the 10-day moving average of 29 pence. Outright bearish at the moment. That's it for me. More updates at spreadbetmagazine.com.